said, every year you get up here and talk, my premium goes up. But no, actually this year, I'm just going to stand up here and let you guys throw tomatoes at me. We're just going to do a quick Q&A. I'm not sure who all I told, but it's been a pretty busy past couple of months, and I wasn't even sure if I was going to be able to make it. So it kind of came together at the last second, and Bird just said, well, would you like to, we got a free spot, you just want to do a Q&A? And I said, yeah, that's fine. So
why is my rate going up?
Because you're a lousy
you're making
pilot.
too much money. So I guess I can start off with a quick market update as well, and then we can kind of go from there too. So, and I'm also just kind of curious, I don't think we've ever done this before, and I know at least half of you in here are customers of mine, but who all got an increase this year? Raise the hands. Got an increase on their premium?
The ones with you or anybody?
Anybody. All right. So maybe half the room or so. So what about, yeah, did anybody's just stay the same? Okay. And then anybody get a decrease? That wasn't a joke. Yeah, no, well, actually, I feel like I was going to say, I thought maybe you did too. I didn't want to speak out of turn, but I thought, yeah. There's been a couple that I remember have had decreases, and, you know, most of the time I think those are going to be guys who are transitions, you know, or just different situations, maybe dropping the value or something like that. But there are still some decreases happening out there as well. And, you know, as far as what's happening with the market, it is getting better. Roger didn't like my answer yesterday when when I said, I said, what, your premium only went up like 5%, right? And he's like, oh, is that supposed to be good news? You know, but, you know, I guess Jimmy was up here and I thought, man, I wish I could talk to my customers like that, you know. Here's how much it costs, and they complain about it, and I just say, it's available, who cares? So,
Hey, I don't have any choice when I got to pay the bills when you send them.
Yep, that's true. Well, there's somewhat.
Have another claim and we'll see what happens.
Yeah. So, you know, really, speaking of claims, gone are the days where we're seeing those 30% increases anymore, unless maybe you have had a claim or there's some other, you know, special situation. But those of you who did have increases, do you remember about what percentage it was?
Double.
It was not double, Roger.
Small.
That was
That was the year before. Yeah. What was that?
Small.
Yeah.
That's because you're, Roger, that's because you're old.
Like I said, special situation. What was it? You had a 25% increase this year? Really? Okay. Okay. Yeah, because I was going to say, you know, really on average, rarely do I even see a 10% increase anymore. You know, it's really been, and some of them have been even under 5%, 3%, 4%. I'd say the max I'm typically seeing on average is about an 8% increase. So it is getting better from an increase standpoint, but you know, it's like anything. Everything costs more right now with inflation. Aircraft are costing more to repair. There's a lot of things that obviously the insurance company has to raise their rates to keep up with the cost of everything else. So it's just kind of all following suit. But we do have 4 new carriers on the way. I know I've told a few of you about this. 2 are already in business. They just started quoting maybe a month ago, maybe 2 months ago. So not a lot of history yet, but I know one of them has already helped us out with a deal here recently. And we've got 2 more on the way. So keep your ears open for these 4 company names are Beacon. So Beacon was a work comp carrier for an aviation work comp carrier at that for many, many years. All they did was work comp. Another underwriter from another company ended up leaving that company, and he reached out to Beacon, and he started a general aviation division for aircraft, general liability policies and things like that for Beacon. So Beacon's there. I haven't seen their appetite or rating on Aerostar specifically yet. I do think they can do them and they will do them, but there's also a lot of carriers. One other thing we're seeing is on the piston twins in particular, they're starting to cap the age of them. So if you have a newer 1980 Aerostar, maybe they'll quote that, but if you've got a 1969, it's not that they won't quote the Aerostar, it's just they won't quote any airplane that old. So a lot of carriers are kind of capping it at 35, 40 years of age is kind of what they're looking at. The other carrier is Eiger. So Eiger was a couple of guys who left W. Brown, good friend of mine, and they went and started a new company named Eiger. So they just started doing business and quoting just about a month ago. And they're definitely going to be able to do Aerostars. Are their rates going to be, and this goes for all of these companies, are their rates going to be as low as the U.S. specialties of the world? Probably not. You know, even though U.S. specialty has kind of raised their rates a little bit to keep up with everybody else, historically, U.S. specialty has always been the most competitive on Aerostars for the past 40 years, as long as you've got a decent amount of time. You know, a few years back, U.S. specialty changed their minimum guidelines to where they wanted to see 150 multi-engine hours in an Aerostar, or for a pilot who was getting into an Aerostar before they would quote it. So that was one change that they made because I think they were seeing some
You
accidents.
said
with the lower-
150 hours of
Yes.
multi-engine?
Yes.
What about total time?
I don't really think they had much of a total time minimum. You know, I'm sure that what they're really looking for is 500 hours, but
Wow.
you know, would they do a guy with 300? Yeah, probably. You know?
Scary thought.
Yeah.
Scary thought.
So yeah, it's really more so been about the multi-engine time. Same with Eiger. I was talking to Eiger just yesterday, and I was talking to him about another deal, and I mentioned, hey, I'm gonna be doing a little speaking thing for the group here tomorrow. What are you guys looking at on Aerostars? What are you going to be doing? He said, we're probably not going to be doing any multi-engine transitions. We're going to be looking for 100 multi-engine hours before an Aerostar. So, you know, I'd say really that's one of the, as far as, I guess we'll say bad changes in the market, the one thing that I'm seeing with Aerostars in particular are that there's less markets who will do the brand new multi-engine guys that just got their rating and have 10 hours.
Yeah.
And or a guy who doesn't have his multi-engine rating yet and he wants to go buy an Aerostar and do the multi-engine rating in the Aerostar.
Right.
There's not many carriers left who are doing that. There's really only one right now who will do that, and their rates are substantially higher. But the third carrier coming is called Mach 2. And that's a couple of guys from aerospace. So aerospace historically has always been very good on the transitions. And just recently, aerospace kind of started to raise their minimums to 50 multi-engine hours. Well, a couple of guys left their company, went and started their own company. And so they're one that they're not up and running yet. It should be coming very soon. But I'm interested to see what they're going to be, you know, what their minimums are going to be. But
That's Mach 2?
Mach 2, yeah. So I know those underwriters, they're good guys, and I know that they're the kind of guys who will think outside the box, and they'll do the transitions if it makes sense. You have a good training plan. You know, maybe you're a little bit lower on the multi-engine time, but they'll require a decent amount of dual before you solo, things like that. So just knowing how they think, I think that there'll be a market for transition Aerostars, but it's just, it remains to be seen right now. And then the fourth one is, I think they're going by 5x5 right now. And that was a guy from IAT, left their company, went and started his own. And actually, he used to be an agent for our company as well. So we've got a long history with him. He's helped me out on a lot of deals We got a good relationship with him. And I'd be willing to bet he's going to be an Aerostar market as well. But he's going to be the last one. You know, when these guys start a new company, it's you'd be surprised how much red tape you have to go through. You know, they have to get licensed with every single state in the entire country. And that alone, the guy from one of the other carriers was telling me, I think they're licensed in about half the states right now, and it cost them 50 grand just to get licensed. So, you know, they're not even bringing any premium yet, and they already just got to, you know, dump 50 grand just to go even get licensed. And,
Right.
you know, a lot of times you can go get licensed in a state and pay all the money for it, but then maybe nobody from that state ever comes to you for business, and you never even write any business in that state, and now you've just, you know, kind of thrown that money away. But you got to have that license to be prepared so that when the business comes in, you're ready to go, and you don't have to say, sorry, I can't do it in that state, you know.
What about cash backing for claims? Do they have to have a certain amount of revenue or a certain amount of money to be able to even get licensed in a state?
Not on the license, but so all of these companies, all four of these companies are not the carrier themselves. They're the underwriting company. So there are a few out there, you know, Global, Star, AIG are just a few examples where those companies are both the underwriter and the carrier. So they work for, you know, let's just say AIG in particular, and AIG doesn't write Aerostars, but AIG, they've got underwriters who work for AIG who underwrite the risk, and then if there's a claim, AIG also pays the claims too. But the large majority of the carriers in aviation, the underwriting companies go get contracted with the carrier. The carrier doesn't know anything about aviation, so they rely on the expertise and the specialization of the aviation underwriter to underwrite the risk and the pilot. And then if there's a claim, the carrier who they're contracted with is the one who actually pays the claim. So all of these new companies are that same way, and they've obviously, and of course we don't know what these numbers are, but I'm sure in that contract they want X number of dollars coming in, you know, within the first year or whatever it is, you know. And obviously if they want to continue to grow, hire more employees, get more support, the carrier's not just going to write them a blank check.
Okay.
So they're going to have to start bringing some money in first, and then they'll, you know, get more support financially for the overhead.
Lance, you know, I think the interest is everybody in this room's got enough hours probably to apply, but it's the age of all of us here. And I think that's the
Yeah.
underwriter that I think most of us would be looking for.
Yeah. So
Have you found anybody that's more beneficial in that area?
yes, you know, aerospace definitely comes to mind. Their rates are a little bit higher, but usually not terrible. And I'd say from a competitiveness on the rating standpoint, aerospace is probably the one that would keep the rates down the lowest and continue to support you past the age of 75, at least right now, the last time I saw.
Is there a set limit on age in all of these companies basically, or are they just arbitrary?
So, you know, to be honest, it is a little bit arbitrary. You know, they have to pick a line in the sand, you know. And so a lot of them do kind of follow the same mindset, but as some of you are aware, 70 is one of the big age markers. So right now in particular, a lot of carriers, even though you may have had a policy for 30 years now, if you haven't been with that particular carrier yet, they still look at you as a new account because you're new to them. So a lot of carriers will not take on a new account once you hit 70, okay? So usually the plan is, you know, you want to start formulating that plan by 68 or so and make sure you're with a carrier who will continue to support you. And and that's not to say either that, U.S. Specialty, for example, they're a carrier who will not write a new account at age 70. But if you get in with them beforehand, they'll continue to support you. But recently, they've been, certainly by 78, maybe even 75. I don't know if I've seen this from them at 75 or not. But around that middle 70 mark, you're going to start seeing maybe an annual medical requirement with an EKG, and maybe even restricting you to flying dual only with a safety pilot at that point. So Aerospace is a carrier that they also, I don't think they'll write a new account past 70. I think it was actually, they'll do it at 70, but not 71, I believe, is Aerospace's rule. But I don't think that Aerospace would restrict you to dual only at 75, maybe by 78, So once you start getting up into the high 70s, really at that point, as of right now, there's only one carrier out there that will take on a new account basically at any age, and they have no limits at all, but their premiums are, 5 times.
Through the roof.
Yeah, through the roof. So, and that's because they know they're the only option.
Yeah.
So they just say, hey, we'll do whatever, we don't care, but here's our price, take it or leave it type of deal.
I've seen that happen.
Yeah.
In your experience, have you seen, like, for the safety pilot, if somebody who's a safety pilot or whatever, do you see a cap, like, if that's the main option, is it like a certain 85, or it just depends?
In other words, if you got two 100-year-old pilots.
Oh, right.
Same airplane.
Not that old, are you, Roger?
Forget about it.
Do you have any experience in that?
Yeah, I mean, they certainly want, they would prefer somebody who is on the younger side and an experienced pilot and everything.
Do you see like a cutoff, like where safety pilot doesn't even matter, you're done? Is there a number that you see? Or is it just case by case?
I think it's case by
Lance,
case.
wouldn't they fall possibly into the open pilot policy side of as a safety pilot? For example, I try to test fly airplanes before, as they come out of maintenance, but in many cases, the open pilot side of the insurance says age 65, no older. So that is,
Well,
yeah,
so
that's a problem.
There's actually only one carrier who has an age restriction on the open pilot warranty.
Okay,
Actually, I think one of the new carriers, I feel like I may have seen that recently, but really, historically, there's only been one, and that's London. So,
Yeah.
but you are right, though, if they do, once they do put that dual restriction on there, it could be dual only with either an approved pilot or a named pilot, or one that meets the open pilot warranty. And then if you're with a carrier that doesn't have an age restriction on the open pilot warranty, then you might be okay. But the carrier could also ask and just want to make sure, okay, we want to also review the pilot who you're flying dual with. And if that's the case, then the age thing may come up at that point. And that's kind of a gray area, because the open pilot warranty is not intended for pilots who are flying very frequently, 100 hours a year. The open pilot warranty is really meant for the one-off cases when it's over the weekend and they're closed, and you had a trip come up that you can't make, and you got to get the airplane in for the annual, and you need somebody to fly it over there. That's really what it's meant for. If you have a pilot who's flying all the time, it's really best to, they want to know about that.
Sure.
Get them named on the policy.
Yeah.
I guess I'm just wondering if there's like a cutoff period.
yeah, there's a cutoff.
No, I'm fine. I'm only 67. I'm a baby.
Sandy, you've had your hand up for a while.
I just want to tell you about the King Air guys. I go to the King Air gathering because we're supplying parts to them. And there's an old guy who gave a talk at the last, not this year, but the year before. I forget how old he is. He's in his 80s. And he said, look, age is makes a difference if you've got a good story to tell.
Yeah.
So, I did it for 2 years now. I'm 85. I still have a category 1 medical and about 7,000 hours. I took, this time, the insurance company carrier said, oh, it's going to be 15% increase. And I went back to my broker, I said, you know, did they get the letter? And he said, yeah, but let me have a chat with him. And he came back a couple of days later and said 5% increase.
I did the same thing, and I was able to get, to keep it, you know.
So we're not all the same, even in insurance.
Yeah, absolutely,
They
yeah.
did raise the premiums, we should be.
Right, but there should be some allowance, or I'm sure there's been some talk about the FAA considering age 67 for Part 121. Will that have any effect on this end of things?
That, really where I've seen that more so is on the hired pro-flown jets.
Okay.
There's actually a lot of carriers now who are not willing to take on a new account for a turbine aircraft that's pro-flown if you have a pro pilot who's now 65. So 65 has kind of been a new cutoff for those types of risk. And the reason for that is they say, well, we're not going to insure them anymore once the pilot hits 70. So we don't want to just insure them for a couple of years and then kick them to the curb. You know, we'd rather them find somebody else who's willing to support them more longer term. Because the other thing too is, okay, let's say, you know, I mean, you can even, if you've got a dual crew flown jet, I've had some that you got an $11 million phenom flown by 2 ATP high qualified guys and the premium's 35 or 40 grand. So if they have to pay a $10 million claim and they have to non-renew it at age, when the pilot hits 70 and they write it at age 68, they've made 100 grand and they've paid out 10 million. So they're thinking about it from if there is a claim, we're gonna take a bath on this. So they'd rather have one where if they pay a claim the first year and they can stay on it, they can make a lot more of their money back longer term.
You mentioned that they're on cap the age of aircraft. Well, basically, there are hardly any airplanes made after 1984, and you're at 40 years right now. So how are they gonna look at capping things at 40 years? And almost every Aerostar, except for maybe 20 of them, are over 40 years old already.
Yeah, so, and again, that's only some carriers, and I think I've only seen that, if we're talking specifically just about Aerostar markets, I can only think of one who is doing that right now. So those markets who are doing that really aren't going after the piston twin stuff as much anyway, so it's all about appetite. So I wouldn't really be too concerned about that, especially when you've only got one who's doing that. And you got 4 more markets on the way. So, I mean, I don't remember the last time, I mean, for the past 10 years, I feel like there's really only been 5 or 6 Aerostar markets, and now all of a sudden, you're gonna be close to 10. So, I mean, you know,
Whoa,
the
that's
markets in
wonderful.
Aerostar are, you know, really going up substantially. So, again, anytime there is, this is how the market cycle works, and this is how it always has been, and some of the older guys in here may remember, you know, 30 years ago, maybe your premiums were through the roof, and then about 20 years ago, they were coming back down, or really, I guess it was about 20 years ago when they really, was when the last hard market was, because I think it was after 9/11 when the rates started going back up again.
Yeah.
And then about 7 years later, all of a sudden, 10 years ago, the rates were the lowest they've ever been in the 100-year history of aviation insurance. And now all of a sudden you're going back up again. So this is always how it happens. And anytime that you have more carriers, it means more competition. So there's more options and hopefully better options for you guys. So anytime there's more carriers out there, usually it's a big help, because you can, these new carriers coming in, they know there's, I'm not going to go to one of you guys and say, hey, let's move you over to this new carrier who has no history and pay them more money too. So they know they've got to be competitive on the rates if they want to build up their books of business. So that's going to help. They know where the rating is at the other companies they work for too, so they know where it needs to be, so they're going to quote lower rates. Then you can use those rates to negotiate your other carriers down. The other carriers know, oh man, we've been losing some business to these new guys. We're going to have to kind of bring our rates down a little bit to compete with them. So hopefully, that kind of helps that trend going in the other direction.
Now, the spread between what you pay and what they have to pay to offlay the liability. They don't carry the liability directly, right?
Say that again.
So you have the broker who writes the policy for $1,000,
Uh-huh.
she gets to keep 200, and the rest of it goes to the actual carrier.
Yes, that's right.
Sure.
Yeah.
So in the end, the carrier is going to determine most of the pricing, other than what this guy can razzle dazzle when he talks to him about this wonderful plane to underwrite.
Yeah. I mean, there really is, to an extent, obviously our agency in particular, and I'm sure there's other agencies out there as well, but we put a huge premium on our relationships. So we just had, I think I may have told some of you about this, but these past couple of weeks, actually it was still going on Wednesday and Thursday. It's done now, but these past couple of weeks, every day for the past couple of weeks, we've had all the underwriters in from all over the country. And those of you who don't know, we also have a gun store, Nashville Gun and Knife. And we have a contact there, and we brought them all in, and we offered them free on-the-house tactical handgun training. So we took them out to a farm. Some guys were experienced, some guys had never shot a gun before, and have a really good trainer who, showed them the basics and brought everybody up. And by the end of we did 1 4-hour class in the morning, 1 4-hour class in the afternoon, groups of 4 to 6. And by the end of it, these guys are moving and shooting and jumping from side to side and shooting steel targets and stuff. So, and then, we get them lunch and bring them into the office, take them out to dinner, all that kind of stuff. So we try to do things like that all the time to kind of stand out from the crowd, so they'll maybe, do us some favors they may not do for other people. So we put a big emphasis on the relationships there. But yeah, to an extent, there's only so much they can do. They've got people in the background telling them, you can't do anything for less than this amount of money, whether it's their reinsurance carrier or whatever it is. Or I've also heard it's getting so analytical, they have a whole analytical team back there, and the underwriters are like, I know exactly where this premium needs to be for this King Air. But the analytical team says, no, you can't do that. That's not where it needs to be. But the analytical team doesn't even know what a King Air is, They're running, just working off all the numbers, and so there's been a little bit of headbutting because of that too. So the underwriter sets the premium, and there's only so much they can do and we can do too,
We've got about 4 minutes left, and Lance, I'd like to hear you talk about the other airplanes. Are we doing a good job in the market, in the insurance marketplace? In other words, how about the Malibu, the TBMs, and the Pilatus, and all these guys? I hear some real horror stories from some of the Malibu guys at $30,000 and $40,000 a year insurance.
Yeah, and again, I think that depends on, you're also talking about that could be close to $1 million airplane, or even the Meridians,
Sure.
3 and above. So obviously, if you have a brand new TBM that's TBM 960 is $4.6 million. If you're paying $35,000 a year on that, that's a good deal. So, so it is all about the higher hull values too. But just as far as the airplanes in general, yeah, I mean, Ken and I were talking. There was 2 accidents this year, and there's been a lot of other issues.
And one fatal and one just a belly landing.
Yeah.
Aerostar.
Oh, on Aerostar.
Yeah. And
I'm trying to get us to 0.
some of the other markets, though, and because I'm on camera, I won't mention any names. But there's been some issues with inertial separators and a lot of FOD damage in certain turboprops, and there's been a big issue with that. There's a lot of underwriters scared of certain airplanes right now, and I don't think that the Aerostar reputation is certainly getting better. It's
Yeah.
not getting any worse.
Yeah,
But-
2002, we had 11 fatal.
Yeah,
So that was the worst, that was the MU2 timeframe too.
Right, right. So the Aerostar, unfortunately, to an extent, does kind of suffer a little bit from what I call the MU2 syndrome
Yeah.
because of its history, and some underwriters just may never forget that, you know. But I think if we all just keep doing a good job, we can continue to show them that. And again, with these new, you may not ever have the other carriers going, you know what, sure, let's go quote some Aerostars now. But when you got these other markets coming in, that's going to be more than enough to
Okay.
help.
Got about 1 minute left, and then we're going to take a 5-minute break, and then Jim's going to,
Lance, have you ever heard of any of the carriers, like say, hey, Don, we'll insure you, but not at an Aerostar, step down?
Yeah, for sure. There, a lot of guys, turboprops are a good example. You have a multi-million-dollar turboprop, or an Aerostar would be a good example too. But yeah, certainly if you get to that age, let's just say it's 80, and you only have one option, and your premium goes through the roof, and you got to pay $25,000 for the Aerostar insurance for a carrier that will continue to support you. If you step down to a 182, yeah, absolutely. There's going to be a lot more carriers who are going to write an 80-year-old in a 172 or a 182 or something, you know.
Retractable high performance, blanket biking,
Yeah, with the retractable gear, not as much. It's still, they're going to,
worried about the forget factor.
yes,
Is
yeah.
the quoting on the insurance is based on the hull value, or is it based on liability?
The large majority of the premium is from the whole value.
Liability is
whole
not
value?
Will there be opportunities to up the liability limit with these new markets coming in?
Potentially, yeah. I would say at least 2, probably 3 of them would be willing to offer the smooth limits. Now, I think that on a piston aircraft in general, the max liability you're going to get without buying an excess liability policy is going to be $2 million with a sublimit probably. But these carriers should offer smooth limits too. So, I think that there will be more opportunity to get slightly higher liability limits. Right now, do I foresee, 5-6 years ago, there were still carriers who would do $5 million smooth on an Aerostar. I don't think that's going to come back right now in the immediate future, but if all goes well, and the market continues to soften, then that's where you'll see maybe they'll start giving a little more flexibility to how much coverage they're offering.
Hey Lance, what about just liability insurance? You all offer that? I'm just saying, I'll give up the whole.
sure.
Yeah, sure, yeah. Usually, and again, to kind of finish with Charlie's question, a large majority of the premium comes from the hull, insuring the hull itself, because that's where the frequent claims are happening. So, your gear up landings, you don't usually get injured, but the airplane sure gets messed up. So, for a gear up landing on an Aerostar, you're talking about $250,000 minimum right off the bat.
Well, the Cirrus parachute situation.
Sears parachute issue, that's a sticky subject, because yes, it saved lives, but
destroyed the
it's
airplane.
$1 million down the drain every time somebody pulls one, and people pull them too early. They don't rely on the training that says pick a field and put it down in the field. They just get scared and pull the chute, and they don't care if the insurance company pays $1 million out. And then, until their premium goes up, and then they're like, well, shoot, maybe I should.
Lance, will you be around for lunch?
Yeah.
And will you be around for our maintenance panel this afternoon?
Yeah, it should be, yeah.
Okay, good. So other questions during the maintenance panel, those are legitimate questions, but we need to move on.